Greetings to all, and thanks for returning to Everything Tesla stock. For the past few weeks, Tesla has been in the news. The EV company is continuously looking for new methods to increase its market worth, so there's always a story to tell. In an effort to make the shares more accessible, the corporation has now announced a 3-to-1 stock split. Similar to the majority of EV firm announcements, this has sparked a number of responses from analysts and investors, who have given alarming price estimates for Tesla's shares following the split. Following the anticipated stock split, analysts like Meet Kevin have disclosed their reasons for believing the stock would reach these price estimates. Regarding Tesla's stock split, what is Kevin's opinion? Let's investigate. Before we get started, please make sure to press the like button, subscribe, and enable notifications if you enjoy this kind of content, so you can stay updated on all things Tesla. Tesla has disclosed that it intends to divide its stock 3-to-1. At its annual meeting on August 4, 2022, shareholders will vote on the split, which Tesla believes will assist to reset the market price of the company. Stock analysts like Meet Kevin have responded to this announcement in a number of ways. He thinks the company could benefit from the stock split and that it will probably improve the performance of its stock. American financial analyst Kevin is well known for having a keen interest in investing. He thinks that investors and the corporation might both profit greatly from the proposed 3-to-1 split of Tesla equity. Companies frequently beat the S&P 500, a stock market index that measures 500 publicly traded domestic companies in the U.S., following a stock split. In short, if there is a 3-to-1 stock split, you will receive 3 shares for every Tesla share you now own, with the value of each new share being reduced by 1/3. The entire value of your shares, however, remains unchanged. This is typically carried out when a company's stock price rises to a point where the typical investor cannot afford it. The value of Tesla stock is $714 at the time this tape was made. Assuming no change in price on the split day, every Tesla share will be valued at $238. More investors can now afford the shares at this low price. Retail investors have shown a great deal of interest in purchasing Tesla shares, and the company anticipates that the stock split will facilitate easier access to its ordinary stock for these investors. For this reason, splitting the stock could be the best way to grow Tesla's investor base. What is Meet Kevin's opinion on all of this then? Kevin believes that Tesla's projected earnings are far more attainable than the majority of tech stock forecasts and their exorbitant values. Speaking on the impending split of the stock, Kevin expressed his optimism for the stock and saw this as a chance to acquire more Tesla shares. This is undoubtedly what most Tesla bulls are thinking, as rising stock prices for Tesla always translate into higher profits for the company's stockholders. In a similar vein, Kevin explained why he believes Tesla will surpass the $10 trillion market valuation in the next 10 years after attending the Cyber Rodeo this year. He claims that because Tesla is the world's leading robotics company, it is also the world's best stock. Given that Tesla can implement a copy-and-paste technique to replicate more factories globally, Kevin anticipates that the company will announce 5 to 10 new gigafactories over the next 2 years. Tesla is gradually shifting from being a car manufacturer to an artificial intelligence startup. To put it mildly, its recent declarations of intentions to enter the AI space have been really stunning. There are still a lot of things to look forward to with Tesla, even though the firm is experiencing a lot of pullbacks and the stock may still have a rough ride in the near future. Any difficulties Tesla faces may only be short-term, as demand for its electric vehicles is steadily increasing in China and other nations. Indeed, according to Kevin, Tesla has promise for its supply chain and is unlikely to fail. This is because Tesla was able to use the appropriate training and expertise to develop its new products. Regarding Tesla's newest offerings, Kevin believes that the company's robotic humanoid might be another revolutionary product. He went on to address the main worry for this endeavor, which was that most people were afraid that humans would eventually be replaced by robots. The expert claims that Tesla's Optimus will increase productivity and free people up to work on more lucrative projects rather than doing menial tasks. It's reasonable to conclude from Kevin's assessment of Tesla's future performance that he has high hopes for the business and consequently for the stock. Fortunately, Meet Kevin and a number of other stock analysts concur that Tesla stock is unquestionably a good investment. With a median price objective of $1,000, some financial analysts that CNN Money follows have classified Tesla as a consensus buy. In fact, 12 out of 45 analysts classified Tesla stock as a strong buy after the company announced a stock split in June. 12 rated it as a buy, and 12 more suggested holding the stock over the long run. This indicates that analysts rate Tesla highly. The business consistently outperforms forecasts. Tesla has disclosed ambitions to develop extremely sophisticated automobile models, such as the Cybertruck and Robotaxi, in recent months. Given that these are novel developments in the EV sector as a whole, Tesla might have a significant competitive edge over the majority of other businesses in the sector. The improved Tesla automobile models are also drawing attention. The Model 3 was one of the top 10 best-selling cars of 2021, while the automaker sold over 167,572 Model S units in 2022. The electric vehicle firm has also been using a number of strategies to increase its market worth, which could lead to future stock price increases. If the right steps aren't taken, the stock might become unaffordable for the typical person looking to buy in Tesla. Although Tesla has grown remarkably, the business has recently faced difficulties in the market. Because of this, setting an unrealistic price objective for Tesla stock may not be the best course of action, since a number of variables could hinder the stock's upward trajectory. Kevin feels the same way. The financial analyst said in a tweet that everything in the stock market seems overpriced and that it might be unrealistic to expect $3,000 per share after the split in 2024. What views do other people hold? The global British bank Barclays has changed its target price for Tesla to $370 per share. Brian Johnson, an analyst at Barclays, increased the company's price objective for Tesla from $325, citing concerns about the company's Q2 production and profits, given that its Shanghai output has lately decreased from 315,000 to 251,000. Additionally, RBC Capital and UBS set $1,100 as their target price for Tesla stock. Three key factors, according to UBS analyst Patrick Hummel, are driving this price target for Tesla. The company's improved supply chain, which gives it a competitive advantage over other electric car companies. The high order backlog resulting from increased production at Tesla's 2 new gigafactories, and Tesla's improving margins driven by increased prices and process innovation. Additionally, he stated that Tesla's manufacturing of circuits, battery systems, and software will lead to the company's enormous growth and profitability. Given that the American YouTuber thinks Tesla has the capacity to outperform its rivals for years, Kevin might agree with that. The analyst said that over 50% of his stock portfolio is invested in Tesla in a recent tweet. After the split, one may anticipate an increase in Tesla's stock price, but this isn't always the case. The business fundamentals of the company are a better indicator of a potential increase in stock price following the split. Fortunately, Tesla has experienced stock splits in the past. On August 31, 2020, the firm divided back into 5 equal shares, which resulted in a spike in the price of the stock. Similarly, investors reacted favorably to Amazon's recent 20-for-1 split. This tells us what to expect and not to get too excited, even though it does not guarantee that Tesla's stock price would rise following the split. For the stock split to proceed, shareholders must still approve it, and a lot can happen before then. In line with Kevin's advice, it's best to avoid making judgments that could cause one's financial portfolio to completely collapse, because it's not a good idea to put all of your eggs in one basket. It is impossible to predict with certainty if Tesla's stock price will increase or decrease following the split, but it is safe to assume that the news of the split has impacted investors' choices to purchase the stock. How do you feel? Is Kevin correct in his optimistic assessment of Tesla? Please share your thoughts in the comments box below. Additionally, select one of these 2 videos to play on your screen while you're still here. I'll see you over there.